Hello everyone. So in this video I'm going to go over US30 and explain exactly how it moves, what it uses and how you can go about trading it on most days, because it normally moves the same. It normally moves towards certain things and it just repeats over and over again, and that is how it moves. So this is how you can trade US30. Go check out the links in the video description as always, and we're going to go over current price action from the 13th, which is the start of 2 weeks ago, to current time. So this was last week, the start of last week. And the main things I want to go over is liquidity, which is the main thing, obviously, how price moves, which is the orange lines. Then we have these blue lines, which are normal support and resistance areas used in previous lows and previous highs. And then you have the grey areas up here, which are key areas which are normally used as support when price comes into that area. So if you get a grey area, then price is likely to go into that area and form some sort of reversal or push through it and turn it into a platform to keep price going on in that direction. So it's a key area that you can use. So I'm going to go down to the 15-minute time frame and start on this day here. So what price normally does is, in the daytime it will create liquidity, and then around the New York session it will do its main moves and cause a reversal. The New York session is where you find most of the volume on US30. So on this day here, Asian session, you got price creating liquidity on the sell side and clear buy side liquidity. That's why you got a line there. You could have had a line going along there because price did not take the previous high. So if it was going to continue down, it would have took that high and then moved downwards, but it left behind clear liquidity in that area. I only trade the New York session on US30, just so you know. So price came down and this created a double bottom here with a previous low over to your left, which is this low here. So that creates a double bottom with this low here, and that's what it does a lot of the time. You normally find current price will go down and bounce off a previous low level, and it'll create liquidity at that level. So that's what it did there. So that's why I have a line coming along there. That creates a double bottom, which indicates that price is likely to go lower. So when it retraces up here, that gives you a perfect sell opportunity to go down. And where does it come up to? It comes up, takes this clear candle, which is liquidity, and let's put that in orange, so that'd be labeled up like that. Then there you go, price comes up, takes that, and then starts rejecting. We don't come up to that previous low, so it's just under support and resistance level, and then that would be your entry as price starts rejecting. Your stop loss goes at the highest point and you enter as price starts going down, and you target this liquidity here. Price goes down, takes that liquidity, and then you're done. Okay. Remember, we have buy side liquidity left behind up here. Price comes down, and pay attention to the New York opening. I think it's around 2:30 p.m. in the UK. But it'll probably be different because you're currently getting a changeover for the summertime. So it'll be an hour out or an hour before. Either way, you have to work that out yourself. Then price starts consolidating once we take liquidity, and then once we take liquidity, you aim for the other side. Because we have liquidity up here, you would have been your bias would have been to the buy side. So you look for a buy setup, and here, right in this area, you form a bearish FU. So these candles take liquidity here. You form a bearish FU there, and that creates a support once it is broken. So that is your bullish support there. So you'd have a grey area there. This candle pushes through. This candle comes back and retests that support. Once it starts rejecting, that gives you a buy opportunity to go long to target this high here. So you'd move your stop loss to break even. At first it would have been on this lowest point here, or you would have put it down here using the bottom of the grey area or this low here, depending on what the smaller time frame showed. So price would have went up, you'd have targeted, you wouldn't got all the way to that liquidity pool, and price went sideways, so you might have took partial profit, and then price goes sideways, and then you go into the next day. Did we leave behind any liquidity? So you have a bit of liquidity there. So this previous high got taken first, moved down. So you have a bit of liquidity there too. So what price is doing, let me get rid of that. I'll just use lines. So what price is doing is creating uncollected liquidity on the buy side, and then going for it the next day. So the more it leaves it, the more it's likely to target it over the next few days, because it's creating more and more liquidity on one side, and that's what it's doing here. Price goes sideways. This candle takes this low. Does it take that low too? Yes, but it creates a near double bottom. So that would be a clear double bottom there, and you'd have had a liquidity line like that. So this is going into the new London session. You have clear liquidity there as well, and that would be like that. So you may get an upwards movement from here to target these liquidity pools. Price starts consolidating, and you can see here again, we take liquidity from these lows, start the upwards movement, collecting the buy side liquidity, weeks back down, and that creates sell side liquidity. And that's all you're doing, is labeling up liquidity on either side and moving to the opposite side and collecting it. So we're collecting this one and we're collecting this one here. Price goes up, but it does not go all the way to this one. Notice that? So that would be, your entry would be down here, but you also have this bit of liquidity being made, and this bit here. So that's why price then comes down and starts collecting the sell side liquidity. So we then get rid of that because we've collected that and that. We've have a bit of this here, so that would run along like that and create a near double top. So at this point you'd have this bit liquidity up here uncollected, and you'd have two bits of liquidity down here. So that's when price comes down, it starts targeting these areas. Price goes sideways. See, it doesn't clear this one, so that is another bit of liquidity like that. We only took this bit, so what it's doing is ranging at the moment, and now you've got a reversal set up. See, it created another double bottom here between this candle and this candle, so that would be a target for price to go. Then you get a chance of a reversal, and when you start seeing it push in one direction, then you can see, oh, okay, hold on, I've got a bit of liquidity up here, and that is major liquidity. You can give values to it so you know the different kind of strengths liquidity areas are, but over time you get to understand on what exactly it's doing. So then price pushes up. Your entries are after liquidity has been created. So that's where you're looking to enter. So price come down here, and you would have entered once you saw this reversal to the upside. You may have hesitated because you would have been waiting for it to collect this bit first. But once you start getting into it on the smaller time frames, you'll find a support and resistance style in one direction, which I'll go over soon. Price goes up, and where are we going? Are we taking this bit of liquidity yet? We are creating liquidity here, and we've taken this bit here. So let's see here and here, that created a double top. Let's move some lines over. So that created a double top there. Took that double top, and then that would give you chance for a downwards move. That created more liquidity there. So you just move that along like that. And you wouldn't be trading this because you don't trade the Asian session. You're looking to trade the New York session. So you have liquidity on either side. I'll get rid of that. That bit's been collected, and you're looking for one side to be collected first, like that, and that collects this liquidity, and this liquidity. So that's why you got the big downwards move. And if you understand Mr. Casino's concept, you got FUs there, FU there, and that is an institutional candle supporting movement in one direction. But by doing that, you also leave behind clear liquidity there. So prices come down, collected this side and this side, but you still have buy side liquidity up here that we had from the past 2 days uncollected. So that would be your main target once liquidity on the sell side has been collected, and that's what we're doing here. Price comes down, collects this bit of liquidity, which is created a double bottom here. So once that's been collected, you look for a reversal to support that reversal direction, and that will be targeting the buy side liquidity up here. And that's all you're doing, identifying where liquidity has been collected. So there's none on the sell side now. That bit's been collected. And this movement here, you're looking for support in the opposite direction. Okay, so it comes down. So you might have got a buy entry here, and then another buy entry here, because you are taking the liquidity from this area and you are in a reversal area. So you want to be entering once you start seeing rejection and using the low as your stop loss. You may get stopped out a few times when practicing, but over time you will understand what exactly is happening. Then price starts to go up, and we go into the close of the day. So what you've been doing here, looking for a buy in this area. Once we took a bit of small time frame liquidity, you'd have been looking for a buy. Getting into a buy, you got a nice double bullish FU here, which would be in grey here, and that would be bullish support. Price goes up, comes back down, goes into the next day, and we continue higher, and you'd have been in profit because your entries would be down here because you entered in a key area. Let's get rid of this. And what we're doing is identifying where liquidity is and where the support is going. So we said we had liquidity here. We had a lot of imbalance here, which price is filling in. Took that bit of liquidity there. So there's no major one here. Got a previous low there. So this upwards movement is quite strong. It's taking liquidity on the smaller time frames as it moves up. Price goes sideways, and that is when you start to leave behind liquidity on the buy side. So it looks like it's too weak to go up just yet. Then you go into the New York session and you find your support and resistance. So this is running along here. this is your manipulation area that you had in grey. So you'd have had a manipulation area like this in grey, and that is because you've got two bullish FUs in that area that have caused an upwards movement. Price come down into there, you got a higher time frame support and resistance line. We've took this double bottom sell side liquidity, and we have still got clear buy side liquidity uncollected. That gives you a buy setup once you start seeing it go up. You got an FU here, a bearish FU that is a breaker. You may get a retest of that, but the main direction is to get into the buys using your stop loss no lower than this point here. Obviously, the better you can identify it, the tighter your stop losses will be. Price then goes up and you target the buy side liquidity from here, and the previous days, which are here and here. So they are the two lines that you are mainly targeting. Price goes up, hits that first bit of area of liquidity, and then goes sideways. So we do take that, but it basically makes another double top. So it's not finished on the buy side. We've collected that bit, and we formed a nice bullish support there. You now created sell side liquidity. And obviously you look at the higher time frames to get more confirmation. So that area is a manipulation area, but you've also created a bit of liquidity. Not much, but it is there. So this is how it would look. So you have liquidity on the buy side, but you have a strong manipulation area here, and a bit of liquidity on the sell side. So it goes into next day, and we go up. We take more of the buy side liquidity that you had from the previous days, which is over here and here. And you can see it creates another double top here. So first we create a double top with these previous highs, and then we rotate, break that, and create another double top. So that is where you'd be taking your profit. We get rid of them, and then you hit that. You create sell side liquidity like that, and you got a previous low there, and you got a doji candle there on the upwards move, and I would leave it at that. And over the next few days you'd be targeting that double top there, which is your higher time frame target. But at the moment you're expecting price to come down and retrace. Price comes down and collects the sell side liquidity, and it looks like, yeah, we create buy side liquidity here. Is there anything up here that stands out? No, not really. So these are all scalp trades. When you get things like this, you know it's going to be retracing to a key level, and you know it's going to be collecting liquidity on one side. It goes from the left to the right. It goes from the buy side liquidity to the sell side, and depending on the higher time frame, depends on the volume of the movement. So normally when you get high impact news, it will take you to a key level or take liquidity from one side. Then you will get an impulse move, which will create a massive candle in the opposite direction to target the clear liquidity on the other side. So price comes down to here. We start retesting this area here. This is a manipulation area. So that would be your first area to look for bullish support. So you'd be looking for signs of bullish movement in this area. So I think this was on the higher time frame. Price comes down, and that is your first buy. You have a double bottom there that is created. So it creates liquidity at the end, and when that liquidity is created, that's when you're likely to get a reversal. So do we have any more bits of liquidity? Yes. A little bit there, nothing major. But once you get the take on here, that is a good buy opportunity. Creates a grey bearish FU area there with these two candles, and this retest would be your bullish support, and that would be to target this buy side liquidity and this previous high. So your stop loss would go around here. So your stop loss would go on this low because it took the liquidity. We're in a reversal area, and price has given us confirmation of impulse move to the upside, meaning power to the upside. We enter on the retest, and your stop loss would go below the low on where it took liquidity. Price goes sideways, go to the close, and then price opens to the upside. We take this liquidity here, so we get rid of that. Price doesn't take this one, goes up and creates more liquidity, so that's why it's labelled up there. And then price retrace, and then you'd have been knocked out of trade, but it's a nice 1 to 4 risk to reward roughly, and that is on the close of the day. All you're doing is reading price. So what price is doing now is gathering more sell side liquidity. It expects to go lower, so it'll be targeting this bit of liquidity from the previous day. So here and here, that is where we are targeting now. So you expect price to go lower, but over the next day or two, you expect it to go higher to target these previous highs. We have a double top here, liquidity here, and a nice flat top here. Price comes down, and this here takes this liquidity, which is here, took that liquidity. Let's just drag that along so it's nice and bold. Took that liquidity, but we didn't take the low. Price starts reversing right there, and then you got a move upwards using support and resistance to show power to the upside, and we are targeting the buy side liquidity. But as you know, we have left behind sell side liquidity as always, so we can get rid of that bit, get rid of this trade example, and we'll get rid of that. So if you was unsure on how to read price, you would have probably missed this area or missed the scalp opportunities because you was waiting for this liquidity to be collected from the previous days. Price went up, and all it does is form new support. You can see it's formed a support from there too. So that is the daily opening price. So that's an important level to take note of. And that's how it's used as support to go higher. Broke through there, retested and support. And then what it's doing is targeting this double top here. So now you can get rid of price, liquidity here and here, and all you have is this double top up here. And today, that's why price pushed through that level and took that double top here. And when we zoom out, that is the double top I'm talking about here. Price pushed through it, came back down, and it's a nice sell area, and then used that double top as support and resistance line. So that could be turned to a blue color to indicate bullish support, that price is going higher. And then that is why price has gone up and cleared this previous high today at the end of the market close. And now you can get rid of that area of liquidity. And you can go down on the smaller time frames and look for liquidity here. The most visible one is this previous low here, which I will be targeting over the next few days. Go to the higher time frame, and where is price going? It's formed a support to go higher, and then we have a clear bearish support area up here. So what I'm expecting next, if you made it to the end of the video, is for it to go to this grey area, and then we will be targeting this double bottom down here that we left behind. So you should get a movement like that. And on the higher time frame, that will be a movement like this, because we have come to a clear bearish FU area, which is also a weekly bearish FU area, which is a bearish support, and that should keep price down. We've collected all buy side liquidity, and we have left behind clear double bottoms at that level to target. So we're retesting support for the downside, and then we have a target on the downside for price to aim for. And that is all US30 does to trade. It will use support and resistance to move price in one direction. You can see here. So you use the price here. This is what I had today. FU here, push down, retest, push down, retest. Created a double bottom there. So that would be your orange area. Like that. Price came down, took that area, retested this double dot bottom previous high as support. Then you got a reversal, push to the upside, support and resistance here, push to the upside, created a support, pushed, retest, and then you continued up. And that is where it takes us to today. You can also see we got that support and resistance move here. Push up, retest, push up, retest, push up, retest. It's the same thing. When price wants to move, it will use support and resistance to move fast. And the targets it will use is liquidity, which is indicated by the orange lines, and the support. The main areas of support are in grey, which will show you key areas to show a reversal to take place. And that's all you do on US30. Don't overcomplicate things and focus mainly on the New York session, because that is when you will get the big moves, and that is when they take liquidity, because there is most volume in the market at that time. The Asian session and London session, mainly the Asian session, is where it creates liquidity. The London session is where it creates liquidity but also moves a bit, so it'll take minor bits of liquidity. And then the New York session is when they take the big chunks of liquidity because they have the most volume. Also with the high impact news, as always. Check out links in the video description. I'll leave it there. I've chatted for long enough. Have a good day, take care, and goodbye.